Good day all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, and we are now on the 24th of September 2020, about 5:40 p.m. Central Time. You know, I stuck my neck out to all of you. I did it on my subscriber videos. I did it everywhere, that I thought that you were going to find in the stock indices support today if the market broke further in the key moving averages. It did. And we got a heck of a bounce. You did the same thing in the gold and the silver, especially the silver. Silver's off those key numbers by about $1.40 an ounce. So that's from today. So that was a big reversal. Gold's only about $12 away from it, but still an important number area. And it hit the key numbers. The dollar index, well, the question is it high enough to fall back, or is the market going to pick up and embed? We'll talk about that in a minute. On the energy sector, it's a COVID problem. You know, you worry about if the COVID keeps picking up throughout Europe and South Korea. You've got to consider that too. Just what does it do for the oil demand around the world? Not a pretty picture. On the other hand, we're seeing lower production numbers. Demand, if it just stays where it is, we can eat through things. We're in an interesting time. Now, to make things absolutely a disaster for all of us, our Congress is going to shortly, I think it's the end of next week, they break for the elections. They don't come back till just days before the election. How do you get anything passed at that point? That's why you saw today, I think, the olive branch come out from Steve Mnuchin, our Treasury Secretary, in front of the Senate committee. Ms. Pelosi, I understand, is got a bill that she's going to present possibly in the next day or two for $2.4 trillion of relief. It includes money for the airlines. It includes other things that are needed, but it's far away from what the Republicans wanted. Can the two reach a compromise? Nobody seems to know. October 1st, you're going to see airlines start laying people off if they can't get help on this. I did like today that Mr. Mnuchin said he was very much in favor of grants for the cities and states. That's important. How do we get everybody out of this mess? Remember, part of the big argument has been from the Republican side, why reward cities like Chicago, where I live, that don't know how to get their budgets under control? This is a union city. You don't touch a pension, even if you go broke because of them. Not for taking people's pensions away. There's cool things and ways to do all this. Lived here all my life, and it's quite an event to live here. In the weekly area chart of closes, you can see how the S&P has fallen back towards that 18-week moving average of closes. So this correction hasn't done that in any manner, fallen back. Once it got over in May, it hasn't had one of these breaks back to that number. So we're just about there. 32.43 is that number. The low this week is 31.98, the intra-week low, but we haven't got a settlement yet, and we'll get that tomorrow and find out how it does. That's a weekly chart of closes. When we look at this chart, you still see the weakness in the chart, no question. You still see the pattern of lower highs, lower lows that is bearish. When you put on moving averages, the question is, will the market get into that 100-day number, or was today's break in the marketplace, which got down to 31.98, close enough, 14 points away? I don't know. What I can tell you is, if you were to take out 33.20, if that's the number you have to hitting it, that would break this pattern of lower highs, lower lows. Here's what I think has happened. The market is down into that zone of the Bollinger Band and the 100-day average where it's looking for support. That could be an area of short covering. Will the bulls step up to the table? They didn't today in the S&P. When you look at the momentum of the market, forget today, and I'm talking, we're already into now Friday trade, so let's get rid of that. Both numbers, though, on Thursday closed under 20 on the slow stochastic. They did so on Wednesday. They didn't do so the day before. Tomorrow's a real important day. If both numbers close under 20, you have an embedded reading. Now, here's what that means. It means you've locked in a bear trend. It also means that if the red line gets lost by popping back over 20 on a closing basis, after it sets in, odds favor the market can make a run towards the 18-day average of closes. So I'm looking at an area that I expect to see short covering in, and that's where I stuck my neck out. In the NASDAQ has not hit a lower Bollinger Band since March. I don't know that it's going to hit it. I made that, I think, absolutely clear to everybody. The 100-day might be hit, but you're oversold. You're not even trying to embed. So I think what traders are doing, they're starting to nibble. That's the right word. They're looking to break maybe 13% from the market top, saying, hey, how far can we go? But you remember, you got the election coming, and everything can change on you. What if the Democrats sweep everything? Is the market built that in? I heard one very good analyst today about that, and I agree with what they said. The market knows everything. And via that, where prices are tonight, the market already is anticipating a Biden win, a Trump win, and that's what it's already doing. I think that is the smartest thing that you can say. In the Dow, came down, fighting your numbers right here, real close to that 100-day average of closes. Also a very oversold, can't embed right here. So it's only the S&P that could. And when you come to the Russell, the battleground's been crystal clear. It's the 200-day average in gray, the 100-day in the Bollinger Band. 3 days in a row you've been fighting the battle there, and you remain oversold. My belief is that oversold conditions don't attract more selling. You then go back to the chart action, what could get, because you're in a downtrend, short covering. And those are the things you start looking at. In the VIX cash, you've been fighting a battle now for 3 days at the 18-day average of closes. The trend is up. You have higher lows, higher highs, but the bias refuses to join in. The bias is staying under the 18-day average, and momentum is just plain oversold and not even trying to embed. So it too isn't telling much of a story. Then in the bond market, you did something interesting. You had an outside day down on Wednesday. When you take out the high of an outside day down, often the market makes a run at the closest of another moving average if it's above the market, one of the main ones. This is the 100 or the Bollinger Band. So my work is saying it's probably trying to make a run up to that number, which gives it a bit of a bias to the upside, but there's no trend. You have a higher high, lower low, and you're just not putting together anything there. And you've still got the market in the 10-year notes in a downtrend that's hit its target, the 18-day average, and has sort of gone flat on you. Interest rates are not part of the play that's going on right now in many things. The dollar index today fought a battle, finished the day out over the Bollinger Band. Now today was over it, yesterday was over it, and the day before. What about right here? This day the market wasn't. So you have 3 days in a row over the Bollinger Band. My rule of thumb, and that's all that it is each consecutive close over the top Bollinger Band takes away one of the 5% of the time the market closes over it that it's going to pull back. So for tomorrow, I have a 2% chance of staying over it because I've had 3 days in a row over so far, and a 98% chance that it won't. That's the way I look at it. It is also a market. What about these numbers? Well, both numbers are over 80 today. Both were over 80 on Wednesday, not the day before. I'm telling you, this is going to be the end of a week. It's also going to be on daily charts determining in many markets, do we get embedded readings or not. In the euro, you can see how the market too fought its battle, and it had 3 days. Let's see, today's close was 168.85 and a half. No, you had 2 days under, and today it's back over on a closing basis, and tonight it's still over. But it might embed. So you can't count today, and I'm talking today being Friday's trade. Remember, I'm already approaching 6 p.m. You had both numbers on Thursday with a reading under 20 the day before, but here, not the day before. You need 3 days in a row to embed, and then the story gets real interesting. So I've been coy in these markets to my subscribers, telling them I was expecting this, and it's playing out pretty much the way that I was looking. I'm looking for support in the end to show up at 94.82 and a half, right here. the 18-day average. Now, the risk is rather large. It's back down to 94.18.5. That's an awful big play. That's 68 points at $10 a point. It's near a $700 risk. I don't think you're going to get a lot of attraction for it. But as a pure chart play, that should be where support comes in, and the trend is still up. In Bitcoin, so we had the outside day down yesterday, Wednesday. Today, the market takes out that high. You know what I'm going to say? I just said it to you. When you take out the high of an outside day down, the market often goes to the closest of a Bollinger Band or a key moving average. Obviously, the 18's in front of you, and that's what you've done now. So that's Friday's trade already, and that's where you're at. So the market's doing what I thought. The differential between Brent and WTI crude, it's hard to believe it's come back to this $1.50 to $1.75 area and just sort of hanging there. The market's got no trend. It's got a pattern of higher lows and lower highs stuck in right here between the 100-day average and the 18. In the WTI crude, it is trying to give you a move back to the upside, but to do so, you've got to take out 4104. That will then keep the higher lows in place with a higher high. So that's what the market's trying to do. If it does so, the risk on being long is back under 39.40. It's a lot of risk, so I don't know how many traders are going to play with that one. Gasoline is the same type of pattern. You've got lower highs, higher lows, narrowing in. To get bullish, you've got to take out 117.70. To get bearish, you got to get through this low, actually, not right here, unless today takes out Thursday's high. And in nat gas, I was reading stories. They're going, all this short covering, what the heck happened in nat gas? And that's what I think it is. I think people in the October contract had to buy their way out of those, and away you went. Plus, you had Hurricane Beta. Never heard of a Greek name. It's the first time in America it's happened, but it did happen. And I think that combination caught these traders off guard. You know, one of the things I love to do, and you know it if you watch me, is I teach. And I don't know how many of you watching have ever taken my charting course, but let me just share this with you at the beginning. It's inexpensive. It's 6 hours of videos, the charting software, research, $199.95. If you can get it cheaper elsewhere with others, I'm sure you probably can't. I've seen these courses go for thousands of dollars. You don't have to spend thousands. I believe you give me 15 minutes a day over 2 weeks, you're going to get through this course. And the way I teach, I layer everything on each other. There is repetition. I teach by repetition. I've taught trading, just so you have an idea, since the 1980s. So it's 40 years. I've been doing this a very long time, and I love the teaching because then you understand so much more of what I'm doing. The problem is you can't afford these expensive courses. They want to sell it to you one time, then they're gone from it. That's not what I do. I want you to learn. I want you to be one of my subscribers that's also super inexpensive because it's a trip we're all taking together. We're on a path of learning. Go to our website, under the word education, read about it. I think you'll sell yourself. I'm Ira Epstein. Have a great day. I'll see you tomorrow.